Welcome to our accounting boffins out there. Yes, you with Ashraf Patel on your favorite learning program. Matrix Uploaded, the program that's going to make a difference to your accounting results. Now, what is it that we're looking at today? Recall that we've done some work on companies already. The emphasis today will be on the ledger accounts. Let's get right into it. Now, what are your main concepts that differentiates companies from other forms of ownerships that you have studied earlier? Let's look at this. Remember, you're going to be dealing with a share capital, okay? So the account is called ordinary share capital. Then, income tax. Remember when you did sole traders, when you did partnerships, when you did clubs, none of these were subjected to income tax. Why is that? Because they were not legal entities in terms of the law. The company being a legal entity, the company will be taxed in its own right. Okay, what about dividends? Remember we said that the primary reason why people would invest in a company would be to earn a return, and therefore you would work with your dividends. Yes, you're going to appropriate your profits. In other words, you're going to draw up an appropriation account in which you're going to be dealing with expenses that are unique to a company. Very important. Now, let's look at the ordinary share capital account. Number one, you have a balance at the beginning of your financial year. That one there. Remember, that is the balance from the previous year. In other words, the opening balance in your ordinary share capital account. What would it reflect? It would reflect the value of the shares that you have issued to date. When is that? At the beginning of the financial year. Now, how would this account be updated? What would happen to this account during the financial year? Remember, if you sell more shares, then your contra account, your two accounts involved are, start with a known, your bank account, you're receiving money, therefore debited, and you're going to credit an account called ordinary share capital. That's that entry here. Understand that it originates from your cash receipts journal. Your contra entry, like I alluded to early on, a debit to bank and a credit to my ordinary share capital. There's my entry in my ordinary share capital account. Now, what is important here is that remember that this account will record the selling of the share at par value. So in other words, you use the par value when you are recording information in this particular account. Is it crystal clear? Okay, and then obviously you would balance the account and you would end off with a closing balance. So in other words, think about this. You had a balance at the beginning of the year, you sold more shares during the year, and now you have a balance at the end of the year. So in other words, what we're saying is you have an opening balance, you have an entry made during the year, and you have a closing balance. Now, we come to the ordinary share premium account. When will this account be affected? When will we make use of this particular account? Remember here that when you sell the shares for more than the par value, in other words, if you have a par value of say 5 Rand and those shares are now sold at 6 Rand or 7 Rand for any amount greater than the par value, then immediately you're going to be making use of an account called the ordinary share premium account. Why? Because these shares were sold at a premium. Now, definitely this concept of a par value and greater than the par value is something that we're going to be restricting our grade 10s and our grade 12s too. Why? Because our current grade 10s, eventually we're hoping you're going to get to matric. But when you get there, it will be slightly different. So this is only applicable to the current grade 12s. So keep that in mind. Okay, now coming back to the share premium. When you sell shares at a premium, remember your double entry once again, a debit to bank and a credit to ordinary share premium. Now, you will use the premium portion, and that is important, guys. You will use the premium portion of the share price to record in this account here. So in other words, your share premium account is only used when you are selling the shares for more than the par value. Right, now, same story. The balance is your opening balance from the previous year. Did you sell shares this year at a premium? Yes, you did. Debit bank, credit ordinary share premium, that's that entry there. Obviously, you balance the account and that gives you your closing balance. Keep this in mind. This is very important because when you are using this here, you can clearly see your balances at the beginning and your balances at the end of the financial year. This is important information which you're going to use this information later on when we're working with the financial statements. Okay, so we have, in this segment, we have concentrated on two accounts, ordinary share capital and ordinary share premium. But I'm sure you want to know more about companies, don't you? So therefore, what you're going to do? Yes, you're going to stay with Matrix Uploaded.